do believe that one of the most damaging myths out there in the home buying process is you've got to have 20% down in cash or you can't buy a home. And I feel that that prevents a lot of people from even starting the home buying process before it even gets started. If you feel overwhelmed about the real estate market and really not sure where to start, well, you've come to the right place. I'm Austin Evans with Aspire Realty Group. Hey everyone, I'm Austin Evans with Aspire Realty Group and welcome back to my YouTube channel. And today is an exciting day, guys. I've got one of my good friends here and he is my brother-in-law too, and we'll talk about that in a little bit, but also one of the great local mortgage lenders in our area, Steven Reynolds. Steven, how are you doing, man?
I'm good. Thanks for having me on.
Yes, man, it is great having you back on. Guys, Steven is one of the top local mortgage lender here in the Central Arkansas area. And so today we want to kind of deep dive into everything that all you buyers out there may really want to know about, which is getting your mortgage. And really talk about the four major types of home loans out there, being conventional, VA loan, FHA loan, and USDA loan. So we'll deep dive into that. But first, Steven, let's rewind a little bit here. What is a mortgage? Let's just break that down.
Yeah, that's a great question. So most people don't have enough money saved up, or they choose not to spend all the money that they have saved up to buy a house. And so a mortgage is a loan against that property. It's a guarantee, a promise. It's a lien with the bank or a mortgage company, so that they pay for the house and you agree to pay that money back over time.
Yeah. So we've defined what a mortgage is. Now let's kind of start taking a deep dive and learn a little more about each of those four types of loans I mentioned earlier. So let's start first, Steven, with a conventional loan. So this is probably, would you say, the most common type of loan you probably see there? Let's kind of break it down. So what are some unique features, whether it's a minimum credit score, down payment options? Kind of break that down a little bit.
Yeah, so I think most people, when they think about a conventional loan, a lot of people have the misconception that you have to put 20% down, which isn't true.
Yep.
There are a lot of down payment options with a conventional loan. First-time home buyers can do as little as 3% down. A lot of folks choose to do a 5% down conventional loan, 10% down. If you put less than 20% down, you'll carry in some form or another private mortgage insurance. Probably the most common way that that's paid is on a monthly basis. There is an upfront option that a customer can pay one fee up front for their MI, or they can you can do lender paid mortgage insurance where we bump an interest rate, the bank actually pays it, or some form of a split. But if you put less than 20% down, there will be some sort of mortgage insurance.
And a lot of you have probably read something about PMI, private mortgage insurance, and maybe it's got this negative stigma attached to it. When in reality, Steven, it's a really good option because I do believe that one of the most damaging myths out there in the home buying process is you've got to have 20% down in cash or you can't buy a home. And I feel that that prevents a lot of people from even starting the home buying process before it even gets started. And so, Steven, with PMI, so if someone has PMI, how do they get it taken off? Because they can get it taken off of their loan at a certain point. What has to happen for that to happen?
Yep, that's a great question.
Yeah.
On a conventional loan, the MI can come off once you have a 20% equity position. And so that 20% that's based on the purchase price. So you might walk into a situation where you've got instant equity, still got to have PMI in that case. But over time, as the house appreciates, as you start to pay down the principal, you can call the servicer and have that PMI taken off. One of the things you mentioned is I think PMI has a negative stigma. That it's something that people are forced into. I'll give you a real life scenario where I'm helping a couple right now. And PMI on a conventional loan is priced based on credit. So if you have really good credit, PMI can be a good option for you to hang on to some of that cash and pay a small fee. This couple I'm helping currently, for 0.21%, they're able to hang on to that extra 15% of their purchase price. So for $47 a month, they're able to hang on to more than $30,000.
That's crazy.
Yeah.
That is crazy. Yeah, and two guys, we don't ever want someone to spend every penny they have saved up in cash to buy a home, because we know that can put you in a real bind financially. If you have all your cash, you used it to buy your house, you didn't want PMI, but then what happens when you got to replace the gutters? What happens when the water heater goes out, the AC needs work? If you don't have cash, that can create that snowball effect where you have to use credit cards. You start adding unwanted potential debt to you. So the PMI, guys, it's not near as bad as you think. And what I recommend to everyone out there, if you're in a position where you don't have that 20% down payment in cash sitting, get with a local mortgage lender like Steven and run the numbers. Just that scenario you just said, that's crazy, where it makes perfect sense for that couple to hang on to their cash and keep PMI on there. So cool. So that's conventional loan. So let's move to the next one. Talk about a VA loan. So Steven, let's define what a VA loan is and who actually applies for the loan.
Yeah, so a VA loan is designated just for veterans. You have to be able to qualify. We contact VA, and you have to be able to prove through those documents, through a DD 214, that you are eligible for that veterans loan.
Okay. So the VA loan, though, has some unique features to it. The biggest one being no down payment is required. Are there some other unique features a VA loan has to it that you can kind of explain?
Yeah, the biggest one, like you mentioned, is it offers financing for 100% loan to value. Another great feature is it does not have any mortgage insurance. So even though you're not putting 20% down, it doesn't have a monthly MI feature to it. A VA loan does, in most cases, have a funding fee. So first use VA, you're looking at a 2.3% funding fee. Subsequent VA uses at 3.6%, and that fee goes into the principal balance of the loan. So one thing I would tell you to be mindful of on a VA loan is you're going to have to hold that house for a period of time so that your principal payments can help catch up to that fee. One thing that is notable, though, if the veteran has any disability, that VA funding fee is waived. So even if 10% disability, the VA waives that.
So it doesn't have to be a full disability situation. So partial. Okay, that's a big one, guys. Especially with all veterans out there. We thank you for your service, and that's a big deal, big benefit for you out there. So before we move on to FHA, the next one, I want to step back and talk about VA loans in the media and this is kind of something going around. I know I see as a realtor talking to maybe other realtors in the real estate market, and that is VA loans sometimes have this negative stigma around them to sellers that VA loans are difficult to close. They fall apart a lot. You can't get them to the closing table. Can we back that up and kind of just clear the air and explain that's not really the case?
Absolutely. VA loans do have a little bit more paperwork than some of these other loan types. But I'll tell you one thing, the veterans that I've worked with in the past, they're really good at paperwork.
They're very good at it. Yes.
They're punctual.
Yes.
They're thorough, and so that proves not to be a challenge. Another thing that we hear is that VA appraisals are tough. Well, there's certainly properties that are in conditions that you and I would both recognize. Hey, this isn't going to fly with the VA appraiser. I'd say it's likely to not fly with the conventional or FHA appraiser either. Houses have to have floor coverings. They can't have broken windows. These are things that sellers are going to have to address if they're going to sell it to somebody who needs a mortgage. On a VA loan, those VA appraisers, they get 10 business days to complete that. So that takes a little bit longer than our process on some other loans. But we budget that in. I'd say for the most part, our VA loans close, and they close on time. So for any sellers out there, if you've got somebody that's looking to buy your house and they're using a VA loan, I wouldn't be scared of it at all.
No. Yeah.
I think, that it's a good product, and typically we're dealing with very well qualified buyers.
Mhm. Yeah, and like you said, a lot of veterans, they've got their stuff together.
Yeah.
They're not going to drag their feet. They know what they want, and they're going to go after and get it. And so, I just want to address that, guys, because you've probably heard that out there. Because a lot of people look at the negative stigma in terms of the appraisal thing, and I've heard, they don't have any skin in the game, so to speak. Well, guys, look, their skin in the game was them serving our country, and so this is just a great benefit for them. So cool. Well, let's move on to the next one, which is an FHA loan. So Steven, same thing. Let's break down who would qualify for this and when would you use it?
Yep. So FHA is a government-backed loan.
Mhm.
Typical down payment on an FHA loan is 3.5%. You're not limited to that. Someone could put down more if they chose to. The mortgage insurance on it is a fixed rate regardless of your credit score. And for that reason, if someone has marginal credit, a lot of times we'll use an FHA loan as that proper tool because the mortgage insurance is going to be a little bit more affordable than a conventional. And to that end, I would tell you, there are people that would pit FHA over conventional and say, oh, a conventional loan is better. No, FHA is just a different tool. And for that person, it may be the right fit. It could mean that the monthly payment is more affordable, but there are other reasons, that it may be the best tool. So if you've got somebody, again, I'd say if somebody is looking to buy your house using an FHA loan, I would still consider it.
Okay.
It's not a lesser loan. It's just a different product.
So you touched on FHA loans help people who maybe their credit score isn't as ideal as maybe it could be. What are the minimums that are allowed? And something I don't think we touched on the previous two. So what are the minimums? Let's go conventional, VA, and FHA.
So minimum credit score is going to, for all those loan types, is going to be 620. There are going to be some thresholds in there where it's going to make more sense to use one over another. A lot of it, comes down to pricing. But yeah, we do go down to credit scores as low as 620 on all those products.
Are there limits on how much house you can purchase, like the purchase price limits, loan limits? Is there a dollar figure for those three we've talked about so far?
There are, and those are updated. Drop those in the comments. I think it's easier to keep it updated that way.
Yeah.
Those typically do update year over year, and as the price of the average house has increased, Fannie and Freddie have updated loan limits across the board. There is no loan limit on a VA loan, but conventional and FHA, we can drop those in the comments. That way we can keep those updated.
Yeah, we'll definitely be sure to get that for you guys. So last, the fourth type of loan, USDA RD loan. So it's a rural development loan is what RD stands for. So Steven, let's kind of explain what those acronyms, what does it mean, what is it, and who would look at one of those?
Yeah, so a house really has, it has to meet a geographical requirement to qualify for RD. We can drop a link in the comments as well, so you can check to see if a house qualifies for RD. The other component for qualification is there is an income limit, which also changes year over year as far as who qualifies for a rural development loan. So ideal customer for this, someone who wants to live outside of the city. There are some pockets. I've seen some stuff, locally that I'm surprised and go, oh, that's still considered rural.
Exactly.
But search the map, check and see. The most unique feature of the RD loan is it does offer 100% financing. The monthly mortgage insurance on it is fixed at 0.35%, which is less than an FHA loan. And the funding fee is less than an FHA loan. It comes in at 1% as compared to the 1.75 on FHA.
Yeah. So for you buyers out there who maybe you've been hearing us talk and maybe you're sitting there going, I want a house, but I don't qualify for a VA loan and I don't have a whole lot of cash on hand. This USDA rural development loan may be an option for you. So I highly recommend you get with your local real estate professionals, your realtor and your local mortgage lender lender like Steven, who really knows their stuff and knows what's going on with all these types of loans. So Steven, hey, man, I appreciate you coming on. I appreciate you going over and breaking this down. I know it's going to help the audience out there to know what they need to do, and they can take this moving forward. So I really appreciate it, man.
Absolutely. Thanks
Yeah,
for having me
yes.
on.
And guys, if you've enjoyed this show, make sure to smash that like button, subscribe to the channel, share it. Feel free to visit my website. It'll be down below in the description. And if y'all have any questions at all about the types of loans, or maybe you have questions for Steven, I can definitely get those to y'all. So make sure you reach out to me, give me a call, send me a text, send an email, and I hope you have a great day, and we will talk soon.